So many things. We talk about Okay, welcome every one of you to this class. Thank you once again. Welcome everybody. I welcome you also to the second section of today's class. You are all welcome. So let's dive into what we have for today. My oga also, Mr. West Bellis, thanks for the opportunity. I also welcome you to this class. So if you can see my screen, kindly give me thumbs up. If you can see my screen, kindly give me thumbs up. Okay, thank you so much, everybody. Thank you so much. So let's start from technical analysis, okay, or analysis basically. In the forex market, we have 3 types of analysis. Okay, in the forex market, you have, today is 7, I wrote 10. I'm sorry about that. After giving enough time, someone is now joining again. So I said that we are talking about the secret of technical analysis basically, but we are going to major today's class and the next few for this month. We are going to major it on technical analysis before we move to the fundamental analysis and the other analysis. This lesson, this program is going to cover technical analysis, fundamental analysis, okay, and sentiment analysis also. And under the technical analysis, is going to cover 2 basic forms of analysis: the pure price action and the Elliott wave theory. Okay, so the boss himself is going to take the Elliott wave theory, and of course, he's going to take us some topics also under under the technical analysis. Okay, so yeah, the technical analysis now, I've said earlier that we have 3 types of analysis. So let us go to technical analysis first. Let's look at the concept of technical analysis. Technical analysis is a widely used approach in forex trading that involves studying historical price and volume data to predict future price movements. So what we basically do is that we believe that the forex market, that it predicts the human behavior, because it is not robots, just like what Mr. Westbury said earlier. Okay, those people that trade, that has the money to trade forex market, they don't use robots, and that is why we don't advise you to go and get money for robots. As a matter of fact, at the early beginning of the company, we also built indicator before we realized that indicator, that's probably the first year. Okay, Mr. Westbury is going to tell you more about that later. That indicator does not work. Okay, all those robots, they don't work. Those that actually move the market, they are not relying on indicators. Or please mute yourself. It's causing distraction from my hand. Thank you so much. Okay, so I want us to have a good environment for this class. Very soon we are going to talk, everybody will talk. Okay, so like I said, that indicator robots, those people that use it, that actually has the big money to trade in the forex market, they don't use all these things. They don't use it. So what you need to do is to understand the technicality behind the forex market, and that's the job of the technical analysis. Now, I'm not talking about a strategy now. I'm talking about how to read the market itself, to be able to tell you, okay, this is who those that are present in the forex market, who is likely to also move. Now, let me tell you the work of a forex trader. The work of a forex trader based on technical analysis is to predict. Okay, we are not gamblers. The difference between a forex trader and a gambler is that the gambler does not have any technical tools guiding him. Okay, but for a forex trader, we have technical tools. Let me make it a little bit brighter and clearer. Let us take the weather forecaster as an example. Okay, they won't just come and just forecast the weather. No, they won't do that. Okay, they look at some technical tools. Of course, they have their own technical tools. I'm not a weather forecaster, but what they will do is that they will probably, when the weather is forming, the cloud is forming at a particular junction, they will know that, okay, at this also place it's going to rain. They have things. So at least 90 to 95% of the time, they are always correct, because they also evolve over time. That is the same thing we do. But not everybody that study the cloud will be able to predict the cloud very well. Okay, so even our forefathers, they have techniques of knowing that it's going to rain, and then they draw the cloud. So also, that is just the similar work of a forex trader. So basically, when the price is not giving you time to move, don't move. Okay, so but people are always after the money, just like when Mr. Westbury sent some of the screenshot of his own personal success story. I was just laughing. Okay, because if you focus on that, it's always showing you that, to show you that he has what it takes to take you to that junction. anywhere you are. And that's why myself I'm here. I can't begin to tell you the progress I've made working with him. Even from the beginning, I now working in the in-house of the academy now as an instructor. I can't overemphasize the progress I've made over time. So the process, the major reason for this training is to be able to hold everybody by hands. We've already put in enough work to be able to help us. So it is now left for every one of us to also put in the work. So traders who rely on technical analysis, okay, analyze the chart. What are things they do? They analyze the chart. They look at patterns and various technical indicators, not the normal indicator I'm talking about now, not the moving average I'm talking about, okay, to identify trends, support and resistance levels, and potential entry and exit. Just like the point I said earlier, this in the morning section, I said that every technical analysis tools that you are employing should give you when you are going to get out of the market, okay, when it's not potential again, and your profit target, okay. I've explained that earlier. So what are also things that you need to look at for the foundation of technical analysis? Research on the behavior that rest on the behavior that historical price patterns trends to repeat itself. All these things happen over and over and over and over and over again. It happens over and over and over and over again. So yours is just to stay cool. Just like over the night, in the middle of the night, when we were working on some stuffs, Mr. Westbellis told me that this is the level that VIX 75 is going to get to. The price is already trading on that particular point. He is saying that because of, based on previous data, what VIX 75 has done before and his own experience. That is why your own experience also has to contribute to how you are going to get into the market. So it's a big deal. It's something that you worth studying, okay? So the technical analysis now focus on historical data, historical patterns, and then it repeats itself. When those things are about to repeat itself, they will leave a trail in the forex market. Then to give you, that indicates that it's time for you to get into the market or stay put in the market. Okay, by understanding these patterns, traders can make informed decisions about the future directions of a currency pair. I said that earlier, or any instruments you are trading. Based on what has happened before, you can easily tell where price is going, easily with experience. I think it wasn't about 2 months ago when I went to, I and Mr. Westbellis, we were together. He said something. We're not talking. And I said that, how does it feel when you already know everything about this trading, when you're already successful in trading? Okay, just like as though I supposed to have done an interview with him on that, probably I would have played the video to us now. He said a statement. He said that just like this songwriter, he said he's lonely, that it will be boring. Because there's nothing left for you, you already know what's going to happen next. You already know what's going to happen next, and it will happen. Okay, but for those of us that are still struggling in the forex market, it's because you don't know what is happening in the forex market. Okay, but when you get to that level, it just be as if you are playing game. Okay, you know when to shoot your shot and when to stay out of the market. Okay, so here are some key components and concepts within the technical analysis. Let us look at things within the technical analysis. Now, there are branches of technical analysis. I need to make us to be aware of it. Okay, we focus on one out of these two, but I need to make us aware of that. We have pure price action and we have the technical indicators. The technical indicators are built under the foundation of pure price action. Okay, they are built under the foundation of pure price action. What the technical indicator, their function is to read the market and then interpret it for you to get in or stay out of the market. But the disadvantage of this is that price must have moved before it works. Price must have moved before it works. And not every technical indicators, they are built at a particular time of price. So when price condition changes, that kind of indicator will give false signal or will stop working. Are you with me? Let me give you an experience I have. I think someone here can bear me witness, though that's not what is there, but I have an experience about 5 to 6 years ago when I started trading. Okay, those of you that know boom and crash, we catch spike. We used to want to say that I want to catch spike in those days. Then there was a particular time I was catching spike, and there was a particular time again I started picking 2 candles and get out of the market. Pick 2 candles before the spike comes. If the spike comes, you can burn the whole of your account. So we always pick 2 candles. We don't know anything that is happening. All we just know is that immediately after spike, we just pick 2 candles and again get out, pick 2 candles. It was working, and then we have this RSI, Ichimoku, and likes on our chart, just like what you have on this part of the indicator. Then all of a sudden, I was doing that. My $5, I think I was able to build it to $10 or so. Then I decided to get in again to pick my 2 candles. Immediately after the spike, I entered to pick my 2 candles. The first candle has not even formed. I just saw a very long candle. I cannot forget. Boom. That was boom 100. You can know how crazy boom 100 can be. And that one single candle cleared my 2-week profit that I've been laboring to build. Okay, on what is it called? On my account, I was like, this is crazy. Then I knew that I don't have the knowledge. I don't know what is happening. I don't know. That time what we do is that we wait for what is it called? RSI to begin to bend, to get to the oversold and overbought level. I'm trying to tell you that not that we don't have the idea of this, but because they don't work, that's why we have to drop them and let them go. Okay, so that is the part of the technical indicators. But the pure price action, just like the word pure price action, following the actions of price, reading the chart as plain as possible, leaving the chart opened. This particular example I use on my chart moved massively. I think it gave me about 300 pips. Okay, so and we have a lot of them. Data, yes, 5 years data. Okay, one was released early this year, like a whole last year data that you can even study. All these things we are going to give you to study them, but it's not going to come easily. It's going to come with hard work. Okay, even as those that are experienced in the forex market, we are still working hard. So if you want to also get to that level, you have to work hard. So what are the types of pure price action? Like I said, we are going to major on pure price action for the sake of this training. There are a lot of them. Okay, we have the chart patterns, okay, and the inverters, what I have over there. We have the harmonic patterns, we have the Elliott wave theory, okay, and we also, of course, by Raphael Nelson Elliott, and we also have the smart money concept. You can see from what I've said now, I've made my research and this is correct. You can see that even the Elliott wave theory is the oldest, and yet is what people don't trade much. If you go online, you will hardly see resources on it. You search for videos, you will hardly see resources on it. You search for only courses, paid courses that you can find on it. But here we are going to get it with a very little amount of money that we have used to subscribe for this training. Okay, Mr. West Bellis himself is going to explain everything. So and then the chart pattern, okay, that is where we are going to pick it from, because you have to understand the pure price action based on the candlestick before going into the Elliott wave. Okay, so you can see that the smart money concept, there's another one I heard of currently. It's called please, can you hear me, please? Someone is complaining about my sound. Can you hear me? Can you hear me clearly? Is it clear? My sound should be clear. Yes, someone's okay. Thank you, sir. Thank you, Mr. Okay, thank you everybody. So that means the person network is bad. Okay, so like I said earlier, that the holders of all this, there's another one that just came up now. It's called Falcon. Okay, and I see that it's already trending also currently. So, but this ones has been proven over the years. We have been using it, I've been using it, and it's working, and that is what is still working, and it works both on synthetic, any pair, on stock, anything, it works on them. Okay, so so we'll not go into the fundamentals for today, because that is not where when we move to the fundamentals, I will also give you some stuff I have written down already on the fundamentals. So let's dive into the technical analysis. The first thing you need to understand about technical analysis, the first thing that you need to understand about technical analysis is that the foundation of the technical analysis is built on what we call candlestick. Okay, candlestick. I believe you can see my screen on candlestick. If you can see my screen on candlestick, just give me thumbs up. Okay, if you can see, okay, I think that raising of hands means you can see my screen. Okay, thank you. Okay, thank you so much. Thank you so much. Okay, thank you so much. So the candlestick, okay, the candlestick is the foundation. You can't read the candlestick, forget about it. You are not yet a forex trader. Okay, and I'm going to teach you, because over the years and over my years of experience in this whole teaching forex, I've been able to gain a lot of knowledge about how this candlestick, and I'm going to break it down for you to understand how it works. Okay, the candlestick. Now I'm going to use this book because it's one of the best books in the forex trading. This is very voluminous, and there are a lot of things that is not even necessary in the book, to be sincere with you. But the book we sent to you, the necessary ones has been discussed in the book. So you can also read it, and I'll also be giving you assignments also. Okay, so let's go through it. I'll just go a little briefing of this candlestick. If you don't know how something comes to be, you cannot understand the power of it. Okay, I'm going to give you history of it, but let us read this introduction because there's something important in this introduction. The candlestick trading Bible is one of the most powerful trading systems in history. It was invented by Homer, okay, Munishia. This man is the father of candlestick, of course. Okay, it happens to be a Japanese rice trader. I'm going to go into the story now. He's a successful, and he's regarded as the most successful trader in history. Okay, he was trying to observe the price, how price behave, and that is how he came about that beautiful techniques or beautiful trading style called candlestick pattern. Okay, so that is why we call it, the full name is Japanese candlestick. I want to show my entire screen because I'll be moving between different slides. So I believe you can see my screen here. So let me give you a brief explanation of how the candlestick comes to be. Let me give you a brief explanation of how the candlestick comes to be. Okay, so I believe you can see my whiteboard now. Can you see my whiteboard? If you can see my whiteboard, let me see. I want to be sure that you are following me. Let me see your thumbs up. That's why I'm asking you if you can see my whiteboard. Okay, thank you. Now let's go straight to this and see how it works. Now, because he's a rice trader, his idea is to track the way the rice price move. I'm going to be using some Nigerian. I'll be using Nigerian naira now so that I'll be able to understand it. Okay, now let's say this morning now the price of rice they start buying rice at the price of, you can say I don't prepare this. I want to do it in the class so that you'll be able to understand it very well, and we'll take this same mentality into the forex market. Okay, so we start selling rice. For all this has been existing, just like the Bible version of flour. When the Bible in the book of First King, I'm just telling a story now. I'm not preaching. So just where the prophet said that a particular portion of wheat will be sold for a particular amount of shekel. Okay, so that is what this man is trying to price. Okay, as this time now, what is he trading at? At another day, what is he trading at? So let us say that today now, rice is trading per bag is 50 naira per bag. Okay, I know that is ridiculously small, but that's our prayer. I hope one day that's going to happen. Okay, so this is 50 naira. Okay, then because people see that if anything just happen in Nigeria now and they are selling a bag of rice for 50 naira, almost all of us, even if you are planning to go and get something before, you will change your plan and go and start buying rice. Okay, because it will be like as if it's a miracle. Okay, so just like, let me use this same course as an example. When we decided to go to train more people and build a big team, and say, okay, let us bring the price to this social amount of money, we can see how many people come in, because the lower the price, the higher the demand, the more we have buyers. Okay, and the more the buyers now, the higher the price will go. Of course, we did that in economics back in secondary school. So now, because of this price now that we have at 15 naira, many buyers will want to come in. Definitely they will buy up, and because of that, there will be change in price will fluctuate. Because I have I have a lot of bags of rice, and I see people tripping in. I have a lot of people standing at my front already to buy it for 15 naira. Even if I give it at 100 naira, or let me say I give it at 75 naira, people will still buy it, because of course they still see that it's still cheap. So what am I saying is that rice started trading at 15 naira in a day. Okay, then it moves because of the amount of buyers. Okay, it moves up. Look at what I'm having now. Look at what I'm having. Please don't miss this out. I'm explaining, I'm taking my time to go back to the origin of these stuffs, so that I'll be able to understand how the whole of this stuff forms. Good. So then it moves to the price of 80 naira. 80 naira, okay, because of how people are tripping in to buy rice. Then it moves to 80 naira. 80 naira. Okay, then some people felt some people, Yoruba people should call them alarogo. They still felt that something that the government has already said that we should be selling for 15 naira. You are selling your own at this market. You are selling your own at 18 naira. We are not buying. But because of some people felt the people did not want to buy again, or towards the end of the day, people are tired already and they just want to sell what is left, so that they'll be able to go to the market and get something, get prepared for the next day. Okay, then they will bring out the price so that they'll be able to sell the remaining ones. Of course, if you are into business, you know how to do that. Then because of that, they want to sell the remaining ones. Okay, price will retrace a little bit. Okay, so that people will be able to quickly come in and buy the remaining one, and then they will go. That will now make price to fall to something around 70. Okay, now track what I've said. Price opens at 50. I'm going to put open around that level now. Open at 50. Open, it opens at 50. Okay, then immediately it opens, buyers came in massively. It pushed up to what? 80%. That is the high of the price. That is the high of the price. That is the high of the price, because the highest for that day, for today, the highest level that rice is trading is at what? 80 naira. But before the close of that day, it moved down to what? Sellers push it down to what? 70. And then we have it as close. We have 70 as what? Close. Okay, we have 70 at close. We have 70 at close. Okay, so I'm going to still make it formal. I'm just trying to use this. I want to take the story, history, and the concept of the anatomy of trading itself together. Okay, then it's closed at what? 70. There's one more thing. If we have high, there will be what? Low. Now, the lowest point of this price is still this 50. Why? Because that is the lowest point that price traded for that day. So that means it opens at 50 and also closes at what? 50. It opens at 50 and also form the low of what? 50. The low is also what? 50. So that means we have the low and open at the same point. Look at what we have now. These four information I gave you here, the open, the close, the high and low, is the four things that happens within any candlestick at any given time. These four basic informations, and this four basic information is what is going to make you money in the forex market or make you to lose your money. Understanding the power of this four information, where the close is, where the open is, where the high is, where the low is going to help you, okay, to understand how the forex market moves. Before I continue, I hope I'm not speaking Japanese. Are you getting me? Are you getting me? If you are gaining massive value, clap for me. If you are gaining massive value, clap for me. Give me a thumbs up. If you are gaining massive value, clap for me. People are not clapping. No. Others are raising up their hands. They are not clapping. Thank you, thank you, thank you, thank you for that. Thank you for that. Okay, so I'm making it as simple as simplicity so that even those that are experienced will gain value, and those that are not experienced also will be able to understand what is going on. The minute you understand what I just said now, I'm going to take it to the live market soon so that you'll be able to understand it. So I just told you that it has the low, the open, the high and close. This will not cause for any question because you understand how the rise open for 15 naira, okay, and the lowest point it trades for today is 15 naira. Then buyers came in immediately to push it up, and then the seller to form a high, which is the highest point of it is that. So look at this now, and then it closed at what? Close. Let me quickly open your mind to something. Look at this level between 70 and 80. That particular level is a level whereby the buyers and sellers fight. But between the 50 to 7, the sellers could not fight with the buyers. The sellers took maximum control of the price. So let us do a little mathematics. 50 to 70 is what? 20 difference. But 70 to 80 is 10%. Is 10 difference. So that means that at the end of everything in this particular candlestick formation, the buyers won the battle. What I just said now, does it make sense to you? So you will see that the buyers are still the final ones in this market. What I just drew here happens to be just a line chart. Like I said in the morning, that there are a lot of charts that represent the activities of the buyers and sellers. Okay, the one you are seeing here like curve is just the line chart. This is how the line chart is going to look like. Okay, then how will the candlestick look like? Look at it. The candlestick has two parts. I gave you that it has 4 anatomy, 4 information, 4 psychology, but it has 2 parts. Let us differentiate it. Psychology of candlestick gives us 4 information, and then the parts of candlestick is 2. What are the 2 parts? It has body and wicks. What forms the body? The strength of a particular a participant in the forex market. If the buyers are strong, you will have the body there. But the wicks gives us the fainting, okay? The what is it called? The fight gives us information between where the buyers and sellers are present. That's where they are fighting. That is where you will see the wick. And when you will see the body, happens to be when the buyers or sellers takes perfect control of the market. In the sake of this, let us look at where the buyers actually have no contender. From this open, buyers push it up to this level. Sellers were not present at all at this 70 level of 70, 50 to 70. Sellers were not present. Okay, so you can see what I just used to represent that particular form. That is what the buyers, the what is it called? The body from 50 to 70. We don't have any sellers there at all, and that is why we can represent it with what? The body. Like I said earlier, the wicks now will give us information about the what is it called? Where the buyers and sellers are present. The buyers and sellers are present at this junction. This is where the buyers and sellers are present. And what are we going to have there? We are going to have a wick. This is basically what forms a candlestick. I just explained any candlestick in the world, be it crypto, currency pair, VIX 75, boom and crash. This is what happens whenever a candlestick is formed. Am I making sense? Am I making sense? Thank you. Okay. Good, good, good. What I just revealed to you now is a deep knowledge of how it forms. This is what formed this candlestick. Let me give another scenario. So look at the things that, now where do we have the open and close? We have the open and close at the body, the edge of the body, just like what we have here now, open and close. Then of course we always have the eye at the highest point at which price is trading. For the sake of this now, seller still came in. That is why I represent it with what? Week. Now let me give you a graph explanation of this now. Let me label everything. This is the week. This is already what we come together to make a book. Any book we are sending to you. So I just explain it to you now. Of course, when we are reading, you may not have someone to explain like this. But with this now, you will be able to understand it very clearly. So let me write this. What do I have here now? I have the week. You can call it the week. You can call it the tail. Like what my boss will say, he will call it oniru. We can have it as shadow again. Shadow. Shadow. Okay? So here, things we call it. But here we call this what? Body. We call this body. Why does it form a body? Over the week, I'll be giving you quiz about everything I've explained. I'll be giving you quiz just to track what we have done, and please participate in the quiz. It will also help you to refresh your knowledge about everything we are saying. Okay, so we call this what? Body, like I said earlier. Body. Okay, why is it body? It shows the strength of whosoever is in the market. In the sake of this now, the buyers and the market. And you can see that now, how do we identify the buyers? Okay, let me just pause a little. I'll give another instance about this before I go to another candlestick. Just give you another form of it. Then I'll tell you what makes it a bullish and what makes it a bearish. Okay, so then we'll begin to look for different patterns of candlestick. I think over the times I've been explaining candlestick, this explanation I just gave is the best so far. I think, I can't say, but I think, okay, because I decide to take it little by little, and that's the best way we can always get this. Okay, now, what other informations do we need? We need to know the open. This is the open. You can see this is where we have the open of this. We have the open here. Open. Like I said earlier, we will still have access to the video. Okay, this is the open. Now, where do we have the close? We have the close here. Okay, we have the close here, and that is what surround the candlestick. We have the close here. Okay, so then after the close, what other information do we need? As I'm writing it, let me be deleting the ones I've done. Then we also need to look for the low. The lowest point is also the what? The open. The lowest form is also the open. This is what Omar, the rice Japanese trader, discovered, and this is a beautiful idea. I'm also going to show you how this happens to be the best form of chart that shows the real impact of the buyers and sellers. Okay, so let me I want to the low here now. This is the low also, the low. Okay, so let's look at the low. You can see that the open and the close is the low now. So let me take this away. Then where is the high now? The highest point is 8 naira. Remember that. The highest point is 8 naira, and this is the high. This is the high. This is the high of the price. Okay, So why is this buyer? Because the price pushed forward. Okay, that's why it is bullish. If I see this candlestick, automatically I know that the buyers are in. And what makes it to interest the buyer? Because price is low. Try to get that. Price is actually low. And because if price is still low, let me now give you a techniques. If price is still low, okay, due to previous data now, this price is currently at a low price. What you should be expecting is that very low you buy. Expect buyers. Just like this, price is still low. This price has once been traded for 500 naira before. Okay, so but it's now at this level. You should know that price will still want to get momentum to around 1 naira, 100 naira, 200 naira before, even if sellers will now push it again. Probably the economy of Nigeria is getting better and then crash it to 10 naira. I believe I'm making sense here now. So you can see the graph. Let me bold this to see what line chart will give us. Okay, this is how the line chart will look like, and here this is how the candlestick will look like. I believe this is clear. Let me screenshot this and send it to us on the platform also. So you can just have it as a means of reference. Okay, so for those that wants to have access to that, but we are still going to have access to the video, by the way. Okay, so with what I've explained so far, any question before I move to the next thing, and then I will sum up together. Any question? If you have any question, just raise up your hand. Based on what I've explained, if you want me to explain one or two things, just to make any clarification, kindly raise up your hand. I'm ready to do that. Any question? I'm taking. Okay, Mr. Adebowale, Mr. Adebowale, please unmute yourself and ask your question. Mr. Adebowale, unmute yourself and ask your question. Evening, sir. Okay, thank you. Now, because of the question you asked now, I have an analysis here, but I'm going to delete it. I'm going to take, you can mute yourself, sir. I will explain that. Okay, now, price will open here. Let me give another instance. That's just one instance I gave earlier. Let me give another instance about the rice price. Okay, before we move, we have 2 hours to spend in this class. We still have a lot of things to cover. Okay, so look at this now. Just the way I explained earlier. Look at this. Price open at 17 naira the next day. Where did price close the previous day? 17 naira, right? Then the next day now, price open. Of course, when it closes at 17 naira, it will also open at that level if we do not have any gap. Okay, if we do not have any gap, about that. So let me quickly write the next day now. Let's look at what happened the next day. Okay, this is 17 naira, like we said 17 naira. Price is now trading at 17 naira. Okay, then immediately when we have this, what happened? Price open at this level, but before price do anything, price still drop a little bit to 60. Okay, look at what I'm saying. Price drop to what? 60. Then because people are already believing that yes, it got to 80 before, it dropped to 70. Some traders will feel like yes, it should get to 60. they are waiting to enter at a lower price. Some people might have put out their pending order at that lower price. Okay, then price go to 70. When price go to 70, the buyers came in massively because they know that the price is now cheap. Fear is now in the market that some people will still be waiting that it should get to 50 that it went to before. Then, but some people will say that I don't want to miss out of the trade. Okay, they enter at 70. Peradventure those people enter at 60 rather. Okay, have more strength in the forex market. Then, because of the buyers are now in, it push up to 100. Okay, it push up to 100 and continue to from this 100 it came back to 70 massively to 70. Then before the end of the closure, price move back to what? 120. Okay, and close at 100. Let me quickly write the figures so that we won't forget the figures. Okay, so let me quickly write the figures. This is another explanation. It moves to 60. Remember, we said it moves to 60. This is 60. Okay, price move to 60. Then went to hit 100. This is 100. Please mute yourself, please. Someone has unmuted himself, and I don't want to be flipping all around because of the recording, so that it will affect the recording. Okay, so what do I have here? Then this is 120. Look at this. Now let's quickly have this. We have it as the line chart. We have the numbers already. Let's have it as what? Let us have it as candlestick now. Look at this. Now the lowest point of this price, the lowest, okay, is what? 60. So then I will have 60 as my low. I will have 60 as my low. I will have 60 as my low. Now, what is the highest point? The highest point is this 120. I will have 20 as my high. Okay, I will have this as my high. Okay, then now let's look at what happened. You can see that since we have a V shape here, we have this kind of shape here. This volume here that is filled. Okay, it means that buyers and sellers are present here because sellers push it first, the buyers also push it here. So this place is going to, it means that this is the fighting zone I talked about earlier. Then we are going to represent that particular point with the wick. Okay, this is the fighting zone, this is the fighting zone also. Okay, with a wick. Price push this. Now you can see that this place, price pushes, sellers came back, and buyers push it again. So buyers won the battle from 70 to 100. Then that will be our what? Our body. Remember what I said? So this will be our body. This particular position that it was just a tug of war will be what? That particular position will be weak. So let me represent my wick there. Now, from the person that asked the question of low, this should be clear now. But let me finish up with what I'm doing, please. Okay. So this is how it's going to look like. We have this level also, you can see we have a V here. Buyers push it up, sellers still push it down again. Okay, so it's a tug of war between them, this particular junction also. So this particular piece is going to end as a wick. Okay, but because buyers push it up, sellers push it again, buyers also won. This is one buyer, two buyer, one seller. That is two buyers and one seller. Of course, you should know that the buyers won the battle here, and that is why we have this. So why do we choose this as low? Price came to test this 60 as the low, as the lowest point that price is forming. But the previous one that we said, the price did not come down at all from where it opens, price just kept on pushing up, and that is why we have that particular portion to be the same position as open and low. But for the sake of what we have here, price push it down to an extent. Okay, price push it down to an extent, and that is why we have it to be what? As a low here, and then we have here as a high. So this is the candlestick momentum of this. Where are we going to have our open? We have our open here. Let me do that also. Let me be diligent with what I'm doing so that I'll be able to see it. Okay, it might sound very simple to those that have experience, but nevertheless, you need to get this right. This is going to be my open. Remember that it opens at 70, then it closes at what? This is a close at 100. Close at 100. Okay, close at 100. Then what's the low? This is the low. For the sake of this candlestick now, this is the low. Low. I said low. Low. And then this is going to be the high. This is what? The high. Okay, so you can see the graph representation and also the candlestick representation. I'm going to go to the live market now and give us examples, series of candlestick to show us, and then I'll move to what differentiates between a buyer, a bullish candlestick and a bearish candlestick. Now, the strength of the buyers here, 70 to 100, that's what? About 30. Here is a good bullish candlestick. It has a strong momentum. I'm just doing this. Of course, we cannot be looking at the price by the side. This is the junction where we always have the price. This price I'm showing you here, we always have it also in the live in the market. Okay, and here is the price. But it will be a very stressful journey when you can see this level. When you are doing this yourself, trying to do mathematics, no. By the strength, by the size of it, you can easily tell that this is what? A strong candlestick. So any condition in forex market can make the candlestick to form anyhow. We can always have the open and the close at the same point. Okay, we can have the open and close at the same point. We can have high and low at the same place. We can have close and high at the same point. You can have it this way. Okay, that's the close and the high is at the same junction. But these people said that so I'm admitting others, please. Sorry for that. What's it called? What happened just now? I don't know. I've been trying to pay for Google Meet, but they've been denying me access. So I don't know why they are doing this now. Okay. So we have 1 hour to go. Let's just give next 5 minutes for others to join. Any questions so far? There's a place I'm heading to in this class. I'm heading to a particular junction in this class, so I believe it's going to be interesting. Any question? Okay, Mr. Folabi Lawal, you can unmute yourself. You can unmute yourself, Mr. Falabi Lawal. If you can hear me, unmute yourself and ask your question, sir. Unmute yourself and ask your question. Yeah, I can hear you now. Good evening, boss. Good evening, sir. I think I can hear you. There's a delay. I can hear you. There's a delay from your point. So just go ahead. Please help me with my phone. Help me with my phone. I can't hear you again. No. I can't hear you. I wasn't able to get that. Sorry, Jerry. Yes. 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 Yes, yes. From the yes, yes. Very correct. Okay, that means you are following. Okay, so others you join. Any other question? Any other question before I continue? Any other question before I continue? Any other question? I believe we all we are learning. I believe we all we are learning. Okay, so if there's no question, let me continue. Let me continue. I believe others will join us during the course. I will make sure I solve this problem of cutting us away from the meeting before the next class. Okay, so let's continue. So based on what I've said here now, anything can happen in the market, and what happens, we always see the effect on it. Now, based on candlestick now, I said that Omar did this based on daily time frame, but it goes beyond that. Then of course improvement will always come into place about any other thing. We always have them in different time frame now. We have the monthly, we have the yearly, we have different time frame. Please mute yourself. Okay, we have different time frame. So then the higher the time frame, the better we know those that will be present in the market. Just imagine someone that is cashing out 20 million regularly every month for 5 years. He has been cashing 20 million every month for 5 years. And someone that just made 20 million in a month. Which one are you going to call a successful trader? Can you write that on the chat box? I want to know your opinion about that. Someone cashing out 20 million naira every month for the past 5 years, and someone that just made 20 million naira for the first month now. Who are you going to consider as a successful trader among the two? Can you hear me? I'm waiting for our response on the chat box. Hello, sir. I've sent the new links, sir. Kindly join the new link, sir. Hello. Okay, let me see response. Only one person responded. Okay, the one of 20 million. Of course, the two are 20, make 20 million now. You don't get it. Okay, someone that makes 20 million. Okay, he has been made it for the past 5 years. Mr. Afolabi got my question right. Others did not really follow, I think. Okay, for the past 20 years, okay, this person has been making this consistent amount of money. So that kind of person, if the person wants to even teach you how to trade, of course you should be able to rely, because the person has been doing it over and over. But someone that made it for this month now, it might be a luck. It might be luck. The person might not be able to even repeat that again. The person can even, with gambling, lose the whole of the money in the next month. You understand what I'm saying now? So the higher time frames tells us the overall participant. If a particular candlestick, okay, from weekly, previous week is bullish, what I will be expecting is what? A bullish candlestick. What I will be expecting is a bullish candlestick. The next candlestick I will be expecting is a bullish candlestick. I believe you can see my screen. You can see this my chart. Okay, look at this now. This is the 75. Okay, daily time frame. We can see that immediately this previous one has already closed bullish. What happened? It already signified that buyers are already in this market and they are ready to push it forward. I'm only giving you one scenario here. Okay, that is just how it works. Let me give you these techniques. Let me just explain. Assume I'm trading based on daily time frame alone. Let me start from this. Let me just show you something. Yeah. This previous candlestick closed bearish. Immediately after this bearish candlestick, I just said, okay, because of this bearish candlestick close, I continue selling. You can see the next day I will be in profit. The next day I will be in profit. The next day I will be in profit. And the next day I will be in profit. Okay, let me say after this, I still continue selling here and I lost this. After saying this, the next day I came in to buy. I will be in profit. I will be in profit. I will be in profit. You can see it that way. Okay, I will always be in profit. I'm just showing you power of candlestick trading alone. This is one technique I've already showed you now. This is just one thing I just revealed to us now. Okay, so the higher time frame now at this point, I need to say this, it holds high value. Hello sir. Hello sir. I'm the one taking the class. I can't be coming and pick. Okay, it has dropped. So okay, so I just showed us the power of the higher time frame now. If you focus on this, you are going to make enough progress. Now, what differentiates the buyer's candlestick and the seller's candlestick now? What differentiates the buyer's candlestick and the seller's candlestick? What differentiates it? What makes the buyer's candlestick? Now, how do you identify a bullish candlestick? The close of the bullish candlestick will be above that of the open. It will close above for bullish, and for bearish, it will close below, regardless of the color. Like the chart I have on my screen now is not a traditional color. You can see this. It's not a traditional color. But immediately I see that this was the close of the previous candle. It opens here, and this previous one closed above. That indicates it's a bullish candlestick. And this, you can see the direction also, a bearish candlestick. So let us look at it. Okay, let us look at this now. Let me just pick one candlestick, analyze it together for just one candlestick, and show us. Me seeing this candlestick, I know that price will fall. This already, even at this level, it already shows me that sellers are in. Okay, so the strength of the time frame also determines the strength of the candlestick. If some people will say that I used to follow this analysis website. Of course, that has been the way that people used to learn forex trading before. That's Pips Babe. Okay, there's a website. Or Baby Pips. Yeah, Baby Pips. Baby Pips. Using Baby Pips. Okay, they used to send me some articles. I love to read the articles, you know, just follow the articles and learn one or two things from the article. So there's one thing I noticed. They used to say that, okay, on this also time frame, this is what is happening on this also time frame. This is what is happening on this also time frame. you cannot compare a 5-minute time frame when buyers are in for 5 minutes and buyers has been in and sellers has been in for a day. Of course, you know that the sellers are still going to get a way out of the market, just like what I show you. Price moves in waves. It moves from one particular price to another one. I said that from the beginning of the class in the morning about the fluctuation of price and how price, what happens or what causes that. So here now, what happens is that, look at this now. When, let me mark this, let me use a current candlestick. Of course, this is a very strong bullish candlestick, but it does not mean that when I switch to the lower time frame, I will not have BS in this particular price. Let me switch to 30 minutes. You will see that, you can see within this 30 minutes I still have what, at least one bearish candlestick within it. Let me switch to 15 minutes. You will see bearish candlestick. Okay, yeah, this is a bearish candlestick. This is a consolidation particular point, okay, of the price. So, but based on this now, on this candlestick, this bearish candlestick now, if you start selling based on this bearish candlestick, you can see that price reverse and cover it up. So those ones are smaller time frames. What are the smaller time frames now? Okay, I'm still going to come, I'll still talk about top down analysis later. I will talk about top down analysis, but that is not what I'm talking about today. There's a slide I'm going to send to us later on that when we do that. Okay, so I want to show you something. What are the higher time frame? We consider from 4 hours to monthly time frame or to yearly time frame. They are the higher time frames. Okay, or will I say from daily? Basically, I will call 4-hour time frame a natural time frame. Okay, and from 1 hour to, I will call 2 hours to 4 hours. Let me structure what I said. Daily to monthly to yearly, those are the higher time frame. Okay, then from 2 hours to 4 hours, I call them the medium time frame. And why the 1 hour below, you will see it on the slide of the top down analysis I did. Okay, there's a particular slide, the article I wrote about top down analysis. I'm going to share it to us later. Okay, so those ones are what? Smaller time frames. If you have experience, it does not mean that you cannot go to lower time frames, but it should be in line to the higher time frame. What the higher time frame is doing. Let me tell you another secret about volatility 75. Of course, we'll be dishing out those things little by little. One thing I have noticed about volatility 75, I also learned from West Bellies, is that immediately what we are saying looking for is to buy. Okay, you will not sell, even though when it's going to sell for some times, it's going to even give you about 1,000 pips for sell. It's likely to give you 1,000 pips for sell. We will not sell. We will prefer that sell to an extent to a particular support level. Then we will now take a buy. Okay, at that buy now has potential of giving us more than 1,000 pips, 2,000, 3,000 pips, and that. Okay, and that is why we have been having those pips you are seeing on the chart. I will just give you another secret about the 75. All those things will be coming one after the other. Candlestick. There are 3 things that are important in this journey of forex trading. Not strategy now. 3 things you need to know how to read very well. Your candlestick momentum. 1, your market structure. 2, your support and resistance. If you can master these 3 things, you are good to go. What you might be struggling with will just be probably your psychology. Please help with the recording. Okay, yes. After the class, we'll do that. Okay, I've explained what makes up a bullish candlestick and a bearish candlestick. For a bullish, it will close above, and for the bearish, it will close below. So let me use a daily candlestick and then try to look at what price is doing. Now, let's look at this. If my analysis is coming from weekly, it has more potential than that of daily, and that of 4 hours, and that of 2 hours, or that. Why do you think I know that this is going to buy last week? Because this previous one already closed what? Bullish. Immediately price pushed down. I knew that price is going to push down to this place because of what I'm seeing on the lower time frame. I sold to this level. Immediately it pushed down to this level. I'm expecting, and you can see before the close of that particular week, it closed bullish. With what we are seeing here, price will still retrace a little bit but still push upward just on candlestick. Leave every other thing. Yoruba people will say efigbele fun agbepo. Okay, leave any other thing just based on candlestick, understanding the momentum of candlestick. Even by the way, you don't even need all those chart patterns and every other thing if you understand the candlestick pattern. Just from where I've just said it now, looking at it from the higher perspective. Okay, but you will be trading it blindly if you don't have experience of some other things. Okay, because those other things will make you to understand the candlestick. Immediately I have understanding of Fibonacci, all those things, all those stuff that we are still going to talk about later. It makes my knowledge of candlestick to be broad, to be wide. Now I don't even do Fibonacci that much again. I only consider it when I want to say retracement. I don't even look at all those trend line and every other thing. The truth is, what is needed is what? The candlestick. There are some levels that have been marked already on my VIX. You can see price will always obey those things, and I'm looking at the momentum of candlestick that approach the level. Okay, so the longer the candlestick, okay, the better it is. Okay, now candlestick forms different patterns. Like I said earlier, it forms different patterns. What are some of the patterns it forms? Dojis, hammer, those things. When you see them on the higher time frame, look at this now. This is a doji. We call this a long leg doji. This long leg doji, based on this long leg doji already, I'm already thinking of buying this pair. This is now, if I have not been buying since last week, I want to enter here now. It might be a huge risk for me, but the best place to have entered is around this level, seeing this doji. This one now that I see, this hanging man, I'm going to explain those things later. Okay, it already signifies that this price is still going to drop more. Okay, so and some of those things. So for the next few minutes, I'm going to talk about one pattern. The first pattern I'm going to talk about today is going to be doji. Okay, I'll be talking about the doji candlestick. Doji, actually some of those words are from Japan. They're Japanese words. Okay, doji means indecision, but does it really mean indecision? I want to open our mind in the forex market today. Does all doji actually means indecision? Now, I don't make any decision when I see these 3 types of doji. We have 5 types of doji. Okay, this you might not be able to see it online. They will just tell you doji or those 4 types of it, but I'm going to give you 5 today. Let me sketch them first. You can see I'm not using any slide here. I'm teaching all these things from what I've experienced in the forex market and what my mentor also, what we have been trading so far. Okay, I'm going to sketch all the doji now. This is one. Like I said, I will not trade doji blindly. So don't just be excited by what I'm saying. Also wanna pick the notes, what I'm saying. Okay, I will not trade it blindly. I said earlier that 3 things are important for you to read, to be able to read in the forex market: your candlestick, your support and resistance, and your market structure. If you can read these 3 things, these are the 3 things I'm going to be combining together to trade this doji, if I will trade it. But this told us that doji means indecision. Okay, doji means indecision. Okay, so these are the 5 types of doji that we have. Okay, let me label the 5 types of doji. We have the first one to be star doji. Star doji. We have this one to be that should long leg doji. I will tell you psychology behind everything very soon. Please understand the psychology behind it. Understand the psychology behind it. Understand the psychology behind it. Dragonfly doji. I will explain the psychology behind these 5 candlesticks today. And when you see them, please take note. Don't trade just by seeing them. Because you see something, don't trade it by that. Trade it by the psychology that you know the doji to have or the candlestick to have. That's why I remind myself about all these stuffs every time. This is not a strategy, but reading the market. Okay, reading the market. Reading the market. Okay, so here are the 5 dojis. Okay, here are the 5 dojis. Now let's quickly dive into the psychology. Okay, the psychology behind these 5 dojis. I will take my time to explain the 5 dojis soon. Okay, now the star doji. The star doji means that the buyers, okay, open the price. Sellers push it down. Let me just show us the line chart of it. It opens here. Sellers push it down. Buyers push it up again. Sellers push it down. Buyers push it up again, and it closes at an equilibrium position. It's closed at equilibrium position. This is not good. Okay, so look at this. No, sorry, please. It opens, sellers push it down, buyers push it. Okay, let me just use this. I don't know what's wrong. Okay, it has a near position of closing and open together. This is the open and close, the high and low. But you can see that the same value that happens downward happens at this up division of price also. You can see that it has equal position, so that means it's indecision. This is a pure indecision. Star doji is a pure indecision. So when you spot a star doji, you stay put. You don't take position. Myself, I don't trade star doji. Okay, but there are some I trade, and I will give you reason I trade it. You can see that there is equal level, a balance sheet between the low point and the high point. That is what makes it a star doji. So it's equal strength, indecision, pure indecision, pure indecision. I repeat myself, pure indecision. This is for the star doji. Okay, now for the long leg doji. Long leg doji is similar to the star doji, but the difference is that it indicates high volatility in the forex market. This long wick that you are seeing shows that there's volatility. And listen, what makes us to actually make money in the forex market is volatility, the volatility of price. But with this volatility, the buyers and sellers still fails to agree on a particular direction. That means you should also stay put. Okay, that means you should also stay what? Put. You should not do anything. So indecision. Then the dragonfly. Why will I trade a dragonfly? Let me show you. You can see that a dragonfly, I will tell you why it is agreed not to trade it. Why books will tell you not to trade it. Why traders don't want to trade it. This is what form dragonfly. It opens here, sellers push it downward, and then buyers push it up. Okay? Sellers push it up. You can see the portion. Now, this is why people don't want to trade it, because it's still below a particular strong level. It's still below a particular strong level. That is why, though it shows the rejection of the sellers push it downward and buyers push it up immediately. But I'm trading it based on the last participant. I will not trade it on slower time frame, remember, and I will trade it on a higher time frame, like the weekly time frame. That is the only time frame I trade all these dojis, any of the dojis, weekly time frame or daily time frame. Okay, and I will trade this doji only on a support, only on a strong support, only on a strong support. I'm going to give you examples. I think there's one I spotted recently, I think on NAS 100 or so. I will give you an example. Okay, I will trade this doji only on a support. I will not trade it anyhow. I will not trade it blindly. Are we together, please? I won't trade it blindly. I will trade it on a support, on a key support, on a key support. I repeat, on a key support. Remember what we said earlier in the morning section, that the hedge funds, they don't trade all those retracements. They trade on a key support. When you identify your key support, when we are going to teach you how to do that, okay, what you need to do then, when you say a doji like this, it already means that the sellers are rejected. Okay, because if the sellers are not rejected, it's not closed as a doji. But the only reason, the only sentiment that traders always have is that it has not break a particular resistance. If it breaks this resistance now, something like this, okay, then we can say that yes, it's a strong one. But because I'm leveraging now on a quick entry, a smaller lot size, that is why if it's going to be on the highest level. Okay, I think there's one chef recently, cat chef. I'm going to check it out. Okay, that is it. Now this is dragon's fly. You can see, look at that fly, dragon's fly. Then the gravestone is the vice versa of the dragon's fly. I will also trade this on a key resistance. On a key resistance. I will trade it on a key resistance. Okay, I will keep, and the same sentiment with the what's it called, with the dragon's fly. Now the 4-point doji, I know this is very rare to see. Also study, I think it was about 3 months or so that I found out this. Some of the videos I've done earlier, you will not see this 4-point doji. Okay, and I will tell you times, is it possible to see this kind of doji in the market? Yes, it's possible, and I'll tell you when to see it. It makes no activities at all. So when you see this, in the days of my ignorance, I've traded this God doji before. Okay, but let me put this to us. Let me see those that have the experience in the forex market. When do you think it is possible for us to see this 4-point doji? Okay, what can happen in the forex market to see this kind of doji? Who can answer the questions? Put it on the chat box. Let me see. Before I answer that question, put it on the chat box. Network is messing up. Can you hear me, please? I think my network is good. Probably from your end. Yeah, others can hear me. Mr. Matthew can hear me. So who can answer that question? Who wants to answer that question? Mr. ID, you can answer the question, sir. Unmute yourself. Unmute yourself, sir. Unmute yourself. Unmute yourself. Okay. Weekends does not identify any doji. Weekends does not identify any candlestick. Okay, it will not show any candlestick. Weekend does not show any candlestick. It will just open the next week. So that is not it's not weekends. It's not weekends. If weekends daily time frame, you mean on daily time frame of weekends? No. The last candlestick I saw on daily time frame, let me show you, on a daily time frame on a weekend is let me delete all this now. Let's go to it together. We are learning. Look at this daily time frame. This candlestick is what? On this Friday 6th. Can you say there's no candlestick for today? So there's no way I can identify if it's a doji or not. Okay, so but I know that you are trying to get it to, but I'm not trying to open your mind to it. It's not weekends. Okay, so let me see any other ones. Daily time frame weekends. No, I just show you. I just prove to you there is not daily time frame weekends. I just show you that any candlestick will not be formed. Okay, and by the way, there are some activities sometimes. Good. That is the answer. Public holiday, not only in US, depending on the candlestick, depending on the period you are trading. Public holiday. You will see lots of, on any time frames, you will always see this 4-point doji. And the 4-point doji there means holiday. Thank you, Mr. Ladi also. But Mr. Mika got it right first. Okay? Holidays. That is it. Holidays. You will always see this. That is why sometimes you also need to follow the fundamentals. You will not be trading when you are already seeing this weakness of candlestick, that candlestick does not have strength and you are still trading. That even some brokers, like I said in the morning, some brokers will shut you up from trading. They will not allow you to trade. Okay, they will not allow you to, like Independence Day of the US for this year, some brokers I use do not allow to trade. I think all the prop firm I have not even allowed to trade at all on that day. Okay, so that is it. And that 4-point candlestick means that all the 4 information that the candlestick carries is on that 4-point doji. The open, the close, the high and low is just within that dash. That is why they call it 4-point doji. Okay, so I believe with what I've explained today, you should be able to identify the dojis. So let's go to what I promised earlier. Look at this. Look at this. At this key resistance, this is a what? A gravestone doji. At this key resistance, see, look at the next day. If you are waiting for the next day to close, you will have missed, let me see how many pips this is. Like I said, you trade in it in line with support and resistance. Okay, I want to look for that particular candle. That particular candlestick falls for 300 pips. That's massive. Am I sure? Let me do the calculation again. Yes, 300. Can you see? Just based on the higher time frame and the momentum price is giving you. But I prefer to trade them on the weekly time frame, like I said. Let me go and identify gravestone doji. What is the characteristic of a gravestone doji? It will always be up. You can see this now. This kind of doji, assume is on a support, it will buy upward. But because it's on a resistance, I will say explain that. Those that are understand support and resistance now, they will get what I'm saying. Because it's on a resistance, can you see? Is a false signal. But if it's on a support, just like this one, you can see the next candlestick happens to be what? Bullish. And this one is already what? Good for a man if you are day trading now. Okay, so let's go back in time and see. Can you see this is a doji? The next candlestick close what? Bullish. This is on a what? On a support. I say if it's on a support, I will bank on it. Understand what I'm saying. Try to understand what I'm trying to say, please. Now, what's the characteristics of a dragon's fly doji? A dragon's fly will have a longer wick below. A gravestone will have a longer wick above. So this is going to be an assignment. Go into the chart and identify all these stuffs. Drop it on the. Those of you that are completely new to this, try to identify it, screenshot it, name it, and send it to us on the group. Look at this now. This is a false signal of doji. You can see this. Why won't I take this? This is a dragon's fly on a what? On a support. And I said you trade a dragon's fly on a what? On a resistance. You can see support, resistance broken to support. Then you see a dragon's fly. Okay, I will not trade this. I will not sell it. A gravestone rather, I will not sell it. But if this gravestone is on a support, I will. Okay, look at this now that this is on a support. I just saw someone now that is on a support. Okay, can you see that this is on a support? Yeah. Okay, support, resistance broken up to support. I will trade this. Any question? What time frames can we get the dojis? You can get it on any time frames, but I said you should go and spot it on daily and weekly. Okay, because of what I'm teaching you. There are other ways to trade dojis. Okay, but doji basically is not meant for traders to trade, basically. But the only way you can trade the dragonfly and the gravestone doji is what I just explained to you, and I just show you proof. This is just one pair. It happens all over across all pairs. It happens across all pairs. There's one I saw recently. Yeah, this is it. Look at this. On a resistance. On a resistance. Look at this doji. A gravestone doji on a resistance. What happened? Price fall to test another what? Support. So this is how to trade this. Okay. So any question so far? Any question so far? Any question so far? Today's class is novice trader. What time frame is advisable for novice trader? Anytime you are building yourself. You are not trading yet. Okay, so it is what you are going to use that you are going to test yourself with. Okay, it is what you are going to use that you are going to test yourself with. It is what you are going to use that you are going to test yourself with. Okay, it is what you are going to use. Sorry, please. Okay, sorry, please. So, any question? Any question? I want to know if there's any question. I want to know if there's any question. Any question? Someone wants to join? Okay. Okay, any question? Any question? I'm with you, sir. I'm with you, sir. I just said that, sir. I said that on a key support, on a major support. I said that earlier, on a major support. Okay, and the ones I've shown you earlier, I picked them from the higher time frame to also show you how it works. I gave you examples. That is back testing. Okay, support and resistance. Is it due to buyers and sellers respectively? Yes. Okay, we are going to get to that. Okay, I'm just trying to show you. I'll still go back to what I've explained now. Okay, how to draw the support and resistance are key. Okay, I'm going to explain that later. Okay, I'm answering your question and also that of Mr. Afolabi together. So what's the next? Any other question, sir? Okay. Let okay. Now let me answer your question, sir. Now listen to what I want to say here. What you are on that kind of trading techniques I just explained now, you are focusing on the key level now, based on the key level. There's nothing you don't need to begin to fool our brain with lot of things. What drives the market is the buyers and sellers, the force of demand and supply, and demand and supply can be seen by reading the candlestick. Okay, why did this, is the simple language, why did this particular direction move downward? Why? Because there's a what, a force of sellers sitting down here, and that is why price move downward. Nothing, no more, no less. So what I'm trying to explain here is that look at this level, price never moved beyond this level I drew. This level I drew here, why? Because I don't just draw them, I drew them from the higher time frame. You can see price came back, got there the first time, rejected, the second time rejected. Now this price getting there, this rejection already tells me, let me say I enter here, okay, based on this now, this is going to be my stop loss definitely below this level, though I wouldn't have entered this because this is not coming from a major support. This would have been something I would have entered. I've said thousands of words without my screen. Now, someone requested for the doji, the 5 doji I said. I've deleted that. Okay, probably I will sketch it and just send it to you later. Now let's look at this. The only reason price rejected at this level is because there's a seller sitting down here. Now price got to this level again, it could not move further, lose for momentum. Even news want to come, it will still push this upward because of this is a key level. The question should be, how then will I identify key levels we get there? Okay, all the analysis I've done this month this year is just based on what I'm just telling you. I don't look for, I will wait for price. If price has not gotten to a key level, okay, I will not think of reversal. Let me, those people that love reversal, yeah, it's buying already, it will now say now, no, don't trade like that. If price has not gotten to key level, I will not look for reversal. I will just follow that trend to the end. As far as price is still here, I sold this downward, this, because it has not gotten to what, a key level. Okay, conservatively, until price break this level, I should buy. Now I'm doing analysis now, but basically what is important to us here is that key level. Look, this is, although this example I'm giving now is not a doji, immediately I see this bullish candlestick, it's a confirm at this key level, it's a confirmation for me to buy already. I buy here, I put my stop loss here, very small stop loss, you can see, and then look at what I will be able to have made just based on this key level. This key level, this rejection also identify what, even when price move downward, it cannot get to the close of that candlestick because that is a key level, and that is the power of key level. Why is it like that? Because the big boys are also there. It's area of interest for them. I don't know, maybe I'm making sense here. It's area of interest for them. It will not be like other support and resistance that can fail. If I'm doing that kind of stuff I'm telling you here, look at this one now, look at this one here. This is a minus level. This is a what, a gravestone, and I said you should look for a gravestone below a what, a resistance. Look at this. Of course you will have missed this because this is not a key level. That is why we have this kind of phase signal. But if it's a key level, everybody cannot have any, even the big boys that they used to push the market, they are fearful at that level because it's a key level, because it's the area of interest by all traders. But look at this doji here now, look at this doji here now, based on this doji, okay, on this, if I enter here, Okay, my stop loss is below the doji, or let me say below this level. Look at it, it's still eventually what? Profit. And I will target the next what? The next high. That's what I'm trying to say. If I calculate these pips alone, it's over, because this is Nasdaq, it's over 300 pips or 500 pips. So do you understand what I'm trying to say now? Seeing them from the higher level. So what I do is that when I talk about support and resistance, you understand what I'm trying to say. I will say this now, I will say repeat it then, just for the sake of clarification of those that have interest in this thing I'm explaining. Price, this is how price behave. Price will have a roof and we have a floor. When price leave this floor, the only thing price is thinking of is to get to this roof. Until price get to this roof, I will not sell. If price is leaving the roof, what price is thinking of is to get to this bottom. If it don't get to this place, I will not buy. Do we understand what I'm trying to say? That same thing applies to, look at this. Look at this. You can see that this thing is not really buying. This potential of this VIX 75 will get to this place. We get up to this place. It will play around to get to this place. Why? It's coming from a major. That is the power. Look at this. Even when this brought up, it could not even still. It does not concern. It does not have anything to do, because even when it brought up, it still find momentum to get back to what? The previous key level. Okay, the previous key level. Since you leave the previous key level, look at this. This one did not get to this key level. Let me screenshot it. Look at this. When price dropped at first, it did not get to the key level, but price look for all means to get to that key level here. Can you see now? Now price is going to push up here. Look at, why is it playing all around here? Because it has not gotten to that what? Key level. As simple as APC. As simple as 1, 2, 3. Am I making sense here? Am I making sense here? Okay, so any other question from any other person? Any other question from any other person? Any other question? Any other question? I think what I just showed us now, Mr. Westbellis also explained this. Okay, any other question from any other person? Okay, so the best thing you can do is, when I send the video, I'm going to do some editing with the video before sending it. Okay, so it might take maybe for me to send it by Wednesday. Okay, but whenever I send it, go over this thing again. You can see where I picked it from. From the simplest to this particular position. Okay, so I think we are good to go today if there's no other question.